It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts. As always, here to take us through the trades today is Scott Bauer. Scott, great to have you with us today. Thanks for being with us on this Monday morning. If we could start with a big picture thought on market performance recently, I'd love to get your take on this choppiness that we've been seeing.
Yeah, choppiness, obviously a little bit of nervousness. I was looking through some stats showing that up until November, when we've had a year that we've had with, X percent gains in the S&P, when November starts off like this, the first couple weeks, then the average gain for the last couple weeks and then December into the end of the year is almost 2% in the S&P. So I guess we can hold our hat on that, but there's really a lot of uncertainty here. But I would say that with all of the uncertainty that is out here, we're not really seeing the VIX go to levels that are showing much concern for right now. So I follow that very, very closely, and that's something I think that we have to keep in mind.
All right, so let's talk about your first pick here. Palantir, a company that's the street's pretty bullish on, but has been under some serious pressure. I mean, just in the last week, down more than 11%. What's your play here and why Palantir?
Sure. Is it a bubble? Is it just rotation? Nobody really knows, but I am looking for a nice bounce here, even though Palantir has dipped through the 50-day moving average and is down below it. So I want to give this a little time. So I'm going out to December expiration, and I'm going to buy the 185-200 call spread, pay about $3 for that. Again, that's my risk to this. If it doesn't bounce back, okay, maybe I just take a little bit of a loss on this. But I really think that once we get through this kind of period of unknown right here, you're going to see stocks that, like a Palantir, that have really taken it hard over the last week or two. I think they're going to bounce back pretty quickly.
All right, Rick, so when we take a look at the technicals here and looking for a longer-term bounce off of some of these lows that we're starting to look at Palantir, what are the technicals showing us?
Yes, a bit of a range that we've seen recently between roughly 169 to the downside and 187 to the upside. We broke above that level. We topped out at 207.52, but now we've retreated. We have found a foothold seemingly at this same level once again near 170. So we did dip below it on Friday on an intraday basis, but our close came in above it once again. Today looking like a little bit more of a question mark so far, but not any kind of convincing breach of that point so far. In terms of the strike prices that we were just discussing, I had my eye on pretty similar levels here. 187 represented the highs from our range. If you recall, that's about 185 here to 200 represents filling the gap then. So that would be my interpretation of those areas of interest there. When we look at our moving averages, we can see that we are below our 2 shorter-term 21-day and 63-day exponential moving averages in yellow and orange respectively. They are both starting to slope downward. They also are roughly in line with our trend line here that begins off of those highs. RSI, our measure of momentum, is moving lower. We've crossed below that 50 midline, and we are still within the boundaries of an accompanying downward sloping trend line on RSI as well. So a breakout above both those levels in tandem would give some bullish weight to any kind of potential breakout. Finally, our volume nodes come in here around the 180 level and here down here around 155 or so. Those could be some further areas of interest or potential consolidation, but the bulls would really want to work through that volume and through those old range highs to take another crack at filling that gap again and hitting some new highs above 207.
Yeah, and right now trading right in between that range you were just mentioning in terms of the volume profile, right at 170.20 right now. Now, Scott, your next one here, is this an earnings play? Because it's Palo Alto Networks. I know that they're reporting on Wednesday. Walk us through your pick here, and are you bullish or bearish?
It is an earnings play. I am bullish, even though many of these stocks have really taken it on the chin, especially if they have not met guidance. So Palo Alto has had many recent upgrades ahead of earnings. The expectation is for a 14% year-over-year growth, which is fantastic. But like I just said, it is all going to come down to guidance. I am bullish here. And what I want to do is take advantage of this week's really expensive implied volatility. So I am buying what's called a diagonal call spread. I'm going to sell this week's 225 call. I'm going to buy next week's 210 call. I can pay somewhere between 3 and 350 to do that. That is my maximum that I have to lose in this position here. But I really think that especially given these recent upgrades going into this report here, I think we can expect a nice pop.
Take a look at the charts here for Palo Alto ahead of their earnings and some of this setup that we've seen, especially with this recent pullback in tech. What are you seeing, Rick?
Yes, a bit of a slowdown in this name here. We broke through this rather steep trend line in blue here. Then our best close came in at 221.38. So that was one area to keep in mind to the upside here. A shorter term white trend line here connecting these lows has been broken. But if you notice, these were our initial lows that we established after our trend line was broken. We tested them. We came quite close, but we did not break through them. That level near 197, 198 or so seemed to be holding firm for now, at least. But as always, earnings could be a major catalyst for change. So when we look at our moving averages, once again, we're below our two moving averages, our shorter term ones. Our 21-day lines up quite closely with that old low trend line from our symmetrical triangle type shape there. Our highs recently came in right around that 63-day EMA. So the 206 level and 211.5 levels or so roughly, those could be further areas to watch to the upside. Momentum moving lower, heading into earnings, not too uncommon for momentum to get a little bit of a stagnation phase before the event risk situation. When we look at volume profile, our nodes come in right around here and right around here. These levels are about 198 or so, and roughly about 212, 213. Those could be other areas of interest to watch.
And again, trading right in between that range that you just mentioned right now, 203.92 for Palo Alto Networks. And important to note, Palo Alto Networks underperforming the broader market on the year, only up about 5%. This last pick, though, Alibaba. Scott, walk us through Alibaba. They've got their earnings coming out a little bit later. Some big headlines out on them, though, recently, and they're trading higher on the day, more than 3% right now.
That's right. Some big headlines, and this one's kind of a contrarian viewpoint. So there have been lots of news here about significant strides in AI and payment systems. They have a new partnership with JP Morgan for a new payment network. I think this rally that we're seeing today, though, is a fade. And so what I'm doing is, this is a real quick trade. I'm buying next week's, so the November 28th, 155. 145 put spread. I can probably pay at this point maybe even a little less than $3, but right around $3. And I kind of liken this to last week. I talked about AMD and the same type of setup where really, really significant, fantastic news came out all at once. We saw a major pop. I was on the show, talked about buying just a quick put spread because I thought there was a little bit too much euphoria in that news. This is really the same type of setup I see here.
All right. So, Rick, as we look at the technicals here for Alibaba, are you seeing a similar setup to some of this hype rally, headline rallies that we've been seeing?
There are some similarities, to be sure. The first things I notice about this chart would be, in addition to our falling wedge type shape here that we have going across the highs and connecting these lows here, that gives us kind of the general boundaries of where things have been traveling here. Also, typically a more bullish shape in this case, but really it can go either way. We're still quite far away from any kind of bullish breakout. But what we can see, though, is that we had this area here that represented support, that 157 mark. We did have a bit of a dip below. It might have been a bit of a nail biter if you were bullish in this name, but we recovered and managed to hang on above that level as our new trading week begins today. If we were to move lower, 145 stands out potentially here. That was some old highs from this area here. That's about where we had a breakout point too. Keeping track of gaps on an ADR like this can be a little more challenging here because of the just generally gappy nature of this type of product. But we can see with our moving averages here, we are right on the nose with our 63-day EMA that comes in around 158.50. Our 21-day EMA just above is around 165. Then beyond that, we have our small gap here near about 174. So finally, when we look at our volume profile and standard deviation channels, our volume profile study shows that we have a node right around 165, lining up very closely with our 63-day EMA. So that area stands out as potential resistance, an area area the bulls would want to work their way through. More volume, much heavier down here, all the way near 130, a bit of a decline, but that's really the next notable area to watch out for by this measure.
Yeah, right now trading 158.79 so far this year. Alibaba up almost 90%. Rick, want to thank you for breaking down the technicals for us. That's Rick Ducat, our lead market technician, and Scott Bauer from Prosper Trading Academy for joining us for the Big Three.